Thanks for tuning into this edition of The Talking Point. I'm your host, Neeraj Shah. And in tumultuous times for risk assets, it pays to probably keep one eye out on what's happening on the engine of growth, which is the economy, and what are the telltale signs of what that is showing. Add to that, this conversation involves talking to one corporate, one of the few corporates which had a fairly strong quarter three, because most of India Inc. was marred by one issue or the other. But Quess Corp had a fairly strong quarter three from the looks of it. And I would love to talk to Mr. Guruprasad Srinivasan, who is the CEO of Quess Corp, about how he thought the quarter went by and what are the early indications of how 2022 could shape up. Mr. Srinivasan, good having you. Thanks for joining in. Hope all is safe.
Hey, Neeraj, thank you so much for having me on this. Yes, all good.
That's good to know. Let's first talk a little bit about how the quarter for Quess was and what is business per se looking like. I'm bringing the quarter into picture only because you had a strong one. And the revenue growth now looked fairly okay. If my statistics are right, highest ever quarterly revenue, EBITDA and PBT for Quess Corp. What went right, and is the momentum likely to continue?
Sure. So yeah, it was a great quarter for us, and we had the highest ever PAT, 94% of PAT in terms of our number that we had put across. Highest ever revenue and EBITDA for. So couple of things, I think it was a mix of both seasonal in nature. So Q3 is largely Diwali and the New Year around. That actually triggers the seasonal spike is one, and plus also the kind of the COVID wave 3 was probably slightly lesser than anticipated. So that is what has triggered a large push for Q3. Is it going to be this way? I believe that the signs of COVID wave even in Q4 January is much shorter than anticipated. So it will be almost the same. Is the sense that what we are feeling from our interactions with various customers that we are talking to.
Okay, so you kind of saying that the dip in January, if you will, that might have come about, and I don't know if it did, but will be kind of taken care of by an uptick in business in Feb and March.
Correct, that's right. So again, if I were to focus on few sectors specifically, BFSI has been almost constant there in terms of we're not seeing major especially on the BFSI fintech side, right? So there's so much of acceleration happening in that space. Plus, the good story is retail is coming back a bit. That is, that's quite positive. So our indicators, our lead indicators on hiring that from our database, I'm seeing retail is slightly opened up, and not to the extent expected though, but that's a good indicator. Telecom is started showing green shoots, so that's a good sign. Slowly, there are traction coming up, which was almost down for almost about 8 quarters now. So that's an area where we are seeing slight action happening. Manufacturing obviously is hiring a lot. IT has been all over, right? So IT is just going all over in terms of hiring. So overall, I would say from our platform perspective, workforce, we are seeing the tendency of hiring. So we're not seeing any withdrawal symptoms. So specifically to the sector that I spoke to you, they are on track. They are on right track. When it comes to our global technology operations, we are doing extremely good. Our platform business is doing really well, both in India where we do the payroll outsourcing. In the uptick on Payslip is the kind of measurement that we look at. So that's a good positive indicator. Only area where we probably need to be little more wait and watch is return to work. So our entire asset management business I would say, is little kind of neutral. So that's an area where for us. So with all wave being almost behind than anticipated timelines. So I think return to work should boost Q1 and way forward.
Okay. Your quarter was also marked by broad-based growth, and in that sense, it showed that some of the sectors did really well. I'm inclined to ask you a question, which is on how of course, IT is strong from the looks of it. The fresher hiring numbers that all companies have given me as targets for 2020 or FY23 or 2022 is very strong. And almost every company that I talk to, which are suppliers to manufacturing, talk about how there is an upsurge in capex likely to happen in 2-3 quarters down the line, and currently the government capex is also yielding some results. So therefore, are those two looking like sweet spots, Mr. Srinivasan?
Oh yes, absolutely. So I mean, as long as I keep getting escalations on hiring, IT is doing really well, which means we are not really fulfilling as much as we want to, but amazingly well. So absolutely nothing, no complaints in that space at all. Manufacturing, you are right. There are, with the buzz of PLI around and intensification on manufacturing in itself, we are in talks, we are in discussion with many customers in that space, where we will see some acceleration coming into as we move into the next quarters.
So, interesting. How would the pressures on pricing for your customers, wherein whole of India Inc. is looking to try and reduce cost pressures? I mean, IT notwithstanding, even the others, IT is trying to, but I know, but the others too. And at the same time, if they are battling those cost pressures and trying to put the pressure, I'm guessing you would feel it in your conversations and negotiations, wherein you might probably want an upsurge out there. So how is that pull and push working out to your mind for you?
So it's going to be, it's going to be that way. Services always will continue to have the cost pressure. I mean, it would be wrong for me to say that we'll not see cost pressure. So the way to look at probably is how can we start measuring the productivity? I think that makes a huge difference. So if we deploy a set of people, we do a time and motion study to see how much of overheads that we can bring down and how much of technology intervention can boost. I think that's the way to go. And with integrated sales, with integrated service, that's going to catch up a lot. So we are doing end-to-end services for customers to optimize the cost, to bring down the cost to serve, and see how we can bring in efficiency into the system. So the language of productivity is something will take priority going forward, and that's the way to go.
Okay. In the call, I believe you highlighted 2 or 3 reasons in particular which led to fall in margins, which, if I read correctly, you mentioned that some of these pressures could be tackled in the next couple of quarters. But what I read of the transcript didn't give me the report didn't give me an exact measure of whether you are confident that the slight margin pressure that you saw in Q3 would reverse in 1 or 2, or is it a wait and watch kind of a scenario? Can you talk a bit about this?
So I would say a clear wait and watch. So it wouldn't really jump up in coming quarters. For simple reason, in our workforce business, if you look at, we have an element of training and skill development, which was actually boosting our margins up. And cautiously, we are bringing that business we are scaling it down. Because of the government dependency, too much of dependency on the government programs and the kind of milestone that we need to achieve, it is tough. So we are scaling that down. So considering that where we are, I think that's the right estimation for any modeling purpose in this specific to this segment and sector. So that would be about, workforce would be anywhere between 3.5% where we are today. Globally, workforce runs around 4% or shared over 4%. So that's the right modeling that one has to look at, and we would be inching towards that as we move forward. But when it comes to the other platform, integrated asset maintenance would operate anywhere between 6 to 7%. So we are currently about 6.5%. So that's an area. And GTS obviously are double digit in terms of teen double digit, anywhere between 14 to 17% is the operating space for the global technology solutions. So that's how our mix is going to be.
Okay. Can I talk about, or can I ask about, and can you talk about businesses in which you increased stakes? I believe Monster was one where you did. I think you made some reference to how some of the platform businesses for you are doing remarkably well. Talk to us a bit about this, please.
Absolutely. So Monster is a great investment, and since when we invested to now, we have got almost we invested at 100 crores, and today it is valued at almost about 700 crores. So it's a great asset to be in. Number two, you should look at from the context of number of freshers who come to the workforce every year. It's almost about 12 million, and there's only one portal in the country. So there's a need for a second strong platform in that place, and Monster is there. And I mean, a lot of indicators in Monster are giving us confidence day by day. Our confidence is increasing. So our renewal ratios, which was almost say 43%, has crossed about 103% now. So which means our renewal rates have become far better. Number of people who share search on our engine itself, is almost about 6 million. Whereas it used to be a year before, it used to be about 2 million. So that is, these are few great indicators. And job portal in itself has to give seamless experience to candidate. So we are bringing in all of those elements where it becomes a better experience in terms of getting end to end at one place, starting from submitting a CV and assessment, and all of that is going to be in one place. On the other side, it's a seamless experience for recruiter to hire. So we are putting our effort in the fund that we have raised onto marketing spend largely, so that we get better footfall and get better conversions from Monster. So that's about Monster. The second area where we have invested is into gig platform. We invested in this company called Taskmo last year. When we invested companies to do about 100 tasks a day, today where we do about 6,000 tasks a day. So it's an amazing platform going forward. As and when the new labor code comes in, and regularization of the new labor code will also regularize gig workers. So that's going to be a new type of employment that's going to be part of the employment mix.
Sorry, can you talk a bit about this? I didn't quite get it. Can you talk about task? Yeah.
So gig economy is going to get regularized as and when the labor code gets implemented, because that's going to be recognized as a type of employment, and that's going to accelerate Taskmo a lot, because if somebody does not want a full-time employee but a task to be completed, say merchant onboarding at store, but you don't need a full-time employee. Somebody can, like an Uber or any mobility app, they come onto my app, pick up a job and complete the task. So they complete specific task, and that's going to, such demand is going to be very high going forward.
Interesting. Interesting. And so you kind of platformizing the gig economy, if you will, whether or not it does eventually get recognized as a full-scale employment piece or no, is a separate thing altogether, right?
It's going to be a combination of everything. Look, the way it's going to evaluate over a period of time, you will have full-time workers, you will have part-time workers, you will have gig economy, you will have apprentices, you will have trainees, combination of everything for an enterprise to use very effectively. It's not going to cannibalize. Each one are not going to cannibalize. Every type of employment is going to stay. So it's going to be a great mix, from employment or enterprise perspective.
And how competitive is this space, Mr. Srinivasan? It seems a very interesting model. I'm just trying to understand how competitive is this platform for Taskmo?
It is evaluating. If you look at it slowly, it's an evaluation. And as I said, we have almost 500,000 taskers on our platform who can pick up and do any kind of task that we want. So, and all this in 1 year. So,
quite stunning. Okay. Last couple of questions. A lot of reports that came in post your Q3, actually pre-Q3 as well, spoke about some of the decisions that Quess as an organization in the last few time periods has taken to, in their words, rectify the capital allocation strategies. And almost everybody says that an eye should be kept out when it comes to Quess on how do they pursue the capital allocation over the course of the next 12 months. In your con calls, in your investor meets, you would be asked this question as well, private or public. Can you throw some color here? And how are you steering this ship since you've taken over the reins very recently on the capital allocation part?
Our capital allocation policy is extremely clear and defined. So from the total profits that we generate, 1/3 is going to go towards dividend, 1/3 is going to go towards acquisition, and 1/3 is going to go towards our internal organic growth. So, I mean, in case if we do acquisition, we spend that. Otherwise, then we try and see how we can return back to the shareholder. So that's pretty clear. Having said that, I think we have done. I mean, all our acquisition that we have done over a period of time is beautifully coming together among 3 platforms. And Quess is the only company probably which can be in the spot which can give end-to-end services, starting from the security to facility to people to food services to the entire compliance management, customer lifecycle management. So we can be one shop stop to our customer. And as we speak, that's actually stitching together beautifully when we go out with proposition to our customers in terms of integrated services that we talk about. So capital allocation policy is very clear. 1/3, 1/3, 1/3 is something that is kind of earmarked within the organization.
Okay. And one question to you before I ask a final question on what's your thesis on what does business mean for India Inc. But I think 2 or 3 reports stated that after the resignation of the erstwhile CEO, I think Quess as an organization did the best move by getting you for this, simply because you've been associated for such a long time with the industry, with Quess as well. But these are not usual times, so to say. Maybe you had a great quarter, but these are unusual times for corporate India and for the world at large. How are you framing the policies, and how difficult has it been for you, or how natural has it been for you?
So I would say it has been fairly natural for me in this transition. So we're not really. I'm not finding it difficult at all, because I have a great team, working with me, and across it's a fantastic team to work with. It has been quite easy for me to jump into this role and start looking at what has to be done for future. So it has been very natural, I would say.
Okay. Last question, really. What do the trends indicate for how would India, because hiring would give a sense of how companies are thinking. Now we have a clear indication of how IT companies are thinking, because they are hiring left, right, center. What about some of the other verticals? Where is it that you find strength? You mentioned telecom, and that's after 8 quarters, it's great. And where is it that you believe that things have maybe slackened a little bit compared to what they used to be?
So, as I said, retail and the entire entertainment division has to start come back to normal, right? So then people go out, spend, buy more. Spend. The consumers have to spend. That's when the economy is going to really get back. I think that we are seeing in the verge. So from our hiring data, retail is something which is very clear about retail, e-commerce, logistics, and supply chain. So all of that is going to really take more load going forward. And with all the schemes that are announced, or with the kind of budgetary announcement, manufacturing is going to get intensified a lot. So that's an area to look for. And of course, fintech is another area to look for, because more digital happening in that space. So barring IT, these are the areas, BFSI, that's entire finance, BFSI sector, then manufacturing, and specifically to telecom and retail. So these are the areas to definitely keep and watch on.
Okay, Mr. Srinivasan, thank you so much for taking the time. Lovely talking to you, and look forward to more interactions with you on Quess and the indications for what it means for corporate India.
Sure. Thank you so much, Neeraj. Thank you so much. Glad to be part of this.
Yeah, the pleasure was ours. Viewers, thanks for tuning into this edition of The Talking Point.